Is Tesla a buy or a sell? Let's get started with the model. This is a large cap company, 1 trillion market cap. They're trading at $3.21 a share, and they have 3.2 billion shares outstanding. Tesla sells EVs, electric vehicles. It also sells used cars, car parts, and offers insurance. It has a huge network of charging stations. Their energy generation and storage segment designs, manufactures, installs, and leases solar energy and energy storage products to residential, commercial, and industrial customers. Incorporated in 2003, headquartered in the beautiful city of Austin, Texas. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video, and free cash flow is cash flow from operations minus capital expenditures. They had $3.5 billion in 2021. It more than doubled to $7.5 billion in 2022. But after that, it's been dropping. $4.4 billion in 23, $3.6 billion in the trailing 12 months. Revenue is going up, but the problem is their expenses are getting so high. It's a tough business to make a good profit. You see their margins are pretty low, between 4 and 9%. Net income is the profit or loss on the income statement. It's revenue minus expenses. Look how much that grew from 5.5 billion to 15 billion. It did drop 15% to 12.7 billion in the trailing 12 months. Pretty good margins. They got up to 15% in 22 and 23. Revenue is the sales for the company, and that almost doubled from 50 billion to 97 billion. Really amazing growth. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 740 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $616 billion. We divide that by 3.2 billion shares. And we get a calculated stock price of $192. They're trading at $321, so they're trading at a 67% premium. It's a sell according to the model. I was extremely aggressive with this model. I gave them a really low whack. Even though I only show 4 years of future free cash flows, I went out more than 4 years. I have an additional model that calculates a terminal value. I don't usually use it on most videos, but on this one I did. But even with all that help, it still seems overvalued. They're getting pretty close to their all-time high. I think they were trading at 1.1, maybe they hit 1.2 trillion, but they're finally over $1 trillion again, all thanks to Trump winning the presidency. There are 34 companies in the same industry as Tesla, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend a ton in CapEx, as most auto manufacturers do. Toyota spends the most at $21 billion. They have a good debt-to-equity ratio, not much debt. For every dollar of equity, they have 10 cents of debt. Toyota has the most debt of any company in the world, but they have a good debt-to-equity ratio, 1.1. Look who generates the most free cash flow, Ford, the American staple. They're pretty high too, 3.6 billion. Toyota is 5.2 billion. GM is second highest at 5.5 billion. Look at Stellantis, 12% dividend, and that's a legit dividend. They keep paying that. So you gotta buy a Stellantis, and they generate a lot of free cash flow. Tesla is bigger than the other 33 companies combined, but their price multiples are terrible. Look at that price to free cash flow, 285. Extremely overvalued, but the stock keeps going up. They generate about 30% of the revenue as Toyota does. They generate half of General Motors revenue, also Ford and Stellantis. They also generate less revenue than Honda, but they're growing a lot. Their 5-year annual revenue growth rate is 32%. Look at Ferrari, 12%. What a great stock to own. That stock has done really well the past few years. NIO is growing the most at 50%. Got to pick up some NIO. That stock used to be real high. Now it's under 10 billion. If you put $10,000 into this company 10 years ago, you'd be a happy camper at $200,000 today. The peak was $220,000, but you could see it's getting back up there. We should have bought the dip, right? We always say that. When the stock comes down, then I'll buy it. And the stock comes down, we don't buy it. And then it comes right back up, and then we regret not buying the dip. To summarize, I have them trading at a 67% premium, ranking 7 out of 10. It's a really solid company. Would I buy it short term? 2 out of 10. It's getting up there, so I'm not sure it's a great value short term. I'm more likely to buy it long term. That's 4 out of 10, but I'm not a huge fan of this stock. I don't like car companies. I think it's a tough business to scale and grow profitably. Ratios are terrible, 1 out of 10. Financials are really good. Free cash flow isn't so great, but revenue is really good. Let's look at their third quarter slides. Auto revenue is flat. It was 19.6 billion last year. Now it's 20 billion, up 2%. It was highest in Q4 2023, almost 22 billion. Energy and storage revenue is up 52%. It's 2.4 billion. But it was higher last quarter. Last quarter it was 3 billion. Service revenue is up 29%, 2.8 billion. It was 2.2 billion last year. That's the highest ever. So total revenue up 8%, 25 billion. But last quarter it was higher, 25.5 billion. Gross profit up 20%. It's 5 billion gross profit. Gross profit is revenue minus cost of revenue. So gross margin is 20%. That's their best ever. Operating expenses are down 6%. That's a good sign. Operating income up 54% to 2.7 billion, their highest ever. Margins almost 11%. That's a big win for this company. EBITDA 4.7 billion, their highest ever, up 24%. Net income 2.2 billion. EPS of 62 cents, up 17%. Look at operating cash flow, 6.3 billion, up 89% from last year. Free cash flow 2.7 billion, up 223%. Total revenue increased 8% year over year. They had a growth in vehicle deliveries. They grew their energy generation and storage segment. Much more profitable, lower cost per vehicle, and they're sitting on 33.6 billion of cash. That's an increase of 2.9 billion. The number of Model 3 and Y units sold, 443,000. They did sell more last year in the fourth quarter, but up from the third quarter of 2023, up 6%. Other models have grown 91%, 26,000, their most ever in a quarter. So total production, 470,000, up 9%. But that's production, not deliveries. The actual deliveries were 462,000, which is pretty similar. Cars that are being leased, 169,000, that's down 4%. They have 19 days of supply. You want to have sufficient supply, but you don't want to have too much supply. Like 28 days is a bit high. 19 days is a lot better. There are 1,300 Tesla locations. That's up 16% from last year. 1,900 mobile service fleet. That's also at the highest point ever, up 5%. 6,700 supercharger stations and 64,000 connectors. That keeps growing as well, both up at least 20%. Here's their production capacity. Model S and Model X in California, 100,000. Model 3 and Model Y, 550,000. They can make nearly 1 million vehicles in Shanghai, Model 3 and Model Y. They have Berlin and Texas. They're working on Nevada and some other places. Our company is between two major growth waves. The first one began with global expansion of Model Y and Model 3. And we believe the next one will be initiated by advances in autonomy and introduction of new products. They're expecting to grow vehicle deliveries in 2024. And they're on pace to double energy storage in 2024 when you compare it to last year. They need to start making less expensive vehicles because a lot of their vehicles are too expensive for the majority of people, even Americans. So they do have plans for more affordable models. And they plan to start production of that in the first half of 2025. They mentioned robo-taxi down here. I feel like every quarter for the past few years, Elon's been saying, next quarter is when we're going to roll out robo-taxi. Here's the global battery electric vehicle market share. If you include China, it's 12% of the world. If you exclude China, it's a little over 4%. And it is growing each year, but still a majority of the world hasn't bought into EVs yet. It's not even close to 50%. Maybe by 2030, it'll be 50%. Look at this Cybercab. It's a good looking car. I wouldn't mind getting that for myself. This is their autonomous Cybercab. It's pretty chic. I like it a lot. It looks like a toy though. Doesn't even look real. Robovan. The future is now. Robotaxi charging. Wireless charging removes need for a human. That would be nice to have wireless charging. Heck, I wish my cell phone had wireless charging. It's so annoying trying to find a plug. Look at this picture at their factory in Fremont. Fremont is in the Bay Area. I'm going to zoom in on this guy. This is awesome. Look at this. He's dabbing right here. You see that? Isn't that funny? There's his face. She's kissing, giving a little kiss to the camera. This guy is looking the other way like, what's going on? Oh, shit, the picture. Powerwall 3, available now. So you could store energy in the Powerwall for later use. Here's a picture of their semi-factory in Nevada. Here's a picture of the semi-truck they're going to build in that factory.
Factory video for Friday, October 25th, 2024, filmed about south. finishing the third run. The northeast corner that has been turned, and it's proceeded about halfway down the parking. People have noticed, and there's a little bit more employee parking elsewhere, but people have noticed that there are staircases added. But anyways, I think this video shows that a lot of
Here's their quarterly vehicle deliveries. So you can see it's pretty much flat. Not really much growth the past 7 or 8 quarters. It's been between 400,000 and 500,000 units for 1, 2, 3, 4, 5, 6, 7, for 8 straight quarters. They still haven't delivered more than 500,000 in a quarter. Their market share is still fairly small, so they have a lot of opportunity to grow. They're just not doing it. Operating cash flow looks really good. They're finally able to cut expenses and become more profitable. Free cash flow also looks real good. That's the red line here. The red line is adjusted EBITDA, which is pretty similar. That still hasn't grown that much. Even companies like Meta, which has been around a while, their EBITDA has doubled since last year. They're growing even more. This company isn't nearly as big as a Google or Meta or an Amazon, at least in terms of revenue and profit. The deliveries in the trailing 12 months, so that's pretty flat the past 5 quarters. It has doubled since 2021. Let's look at Simply Wall Street. Its last price, $320, $950 billion market cap, up a whopping 29% in the past week, up nearly 50% in the past year. Here's the stock price since they started trading in 2010. This is stock split adjusted. It was never trading at $1.46. It was probably trading at like 20 bucks. For the first 2 or 3 years, the stock didn't do much. It was around $1 or $2. Then it started coming up in 2014, and it was pretty flat from 2014 to 2019. Then, as we know, the huge surge where it broke through 1 trillion for the first time, that was at the end of 2021. Then by the end of 2022, it came down to below $100. And now with Trump getting elected, it has surged up. It's back to $1 trillion market cap. So this could be a great time to buy it because the trend is your friend, and it's definitely trending up. Wow, Simply Wall Street is really bearish on this one, $95. They say the stock is 240% overvalued. Here's Simply Wall Street's DCF. They used a WACC of 9.5%, and here's their future free cash flows. $7 billion for 2025, $9.4 billion for 2026, all the way up to $30 billion for 2034. You think it will hit $30 billion? I think there's a decent chance. Then they calculate a terminal value, and when you combine the terminal value plus the 10 years of cash flows, it's 95 bucks. It seems kind of low, but with Trump as president, it will not get to double digits, at least while he's in the House. 43 analysts priced this stock at $225. Look how much their revenue has grown. In 2013, it was $2 billion. Let's see how long it took to double. I'm looking for $4 billion, $2.5 billion, 3.2, 3.7, $4 billion. So from 2013 to 2015, 2 years to double. Let's see how long it took to double again. So I'm looking for $8 billion. $8 billion. Another 2 years. $8.5 billion in 2017. Let's see how long it took to get to $17 billion. Another double. I'm looking for $17 billion. In 2018, the following year, it got to $17 billion. How long to double again to $35 billion? So from 2018, I'm looking for $35 billion. $35 billion. So 3 years to double to $35 billion. How long will it take to double again from 36 to 72? Just 1 year. Now it's $75 billion. And it's currently at $95 billion. So you can't really bash Elon anymore. He did a great job growing this company. In 2013, they didn't have much debt, only $500 million. Then it got up to $13 billion in 2020. It looks like they were preparing for lower sales from COVID. They were able to pay off most of that debt. It got down to $1.5 billion. It's currently $7.4 billion. But when you look at their equity, it's so much higher than their debt. Equity $70 billion, so their debt to equity ratio is 10%. And they have $33 billion of cash on their balance sheet, plenty to pay off all the debt, and still have $26 billion left over. Elon doesn't take much of a salary, $50,000 in 2017. It's currently $24,000. His tenure as CEO has been 16 years. He's been there since the beginning. He's the number one guy. There's been no insider buying and selling. 46% of the company is owned by institutions, 41% by the general public, and 13% by insiders. Musk is the biggest shareholder. He owns 13% of the company. The next biggest is Vanguard, then BlackRock. The Boston firm State Street owns 3.5%. The Boston firm Geode owns 1.8%. The LA firm Capital Research owns 1.7%. The Norwegian bank Norges owns 1%. The Swiss bank UBS owns 1%. The Baltimore company T. Rowe Price owns 0.8%. The Chicago firm Northern Trust owns 0.75%. Then the list goes on and on. Their employee count has gone up quite a bit from 5,900 in 2013 to 140,000 in 2023. And the ticker trades are the Nasdaq, Deutsche Börse, Xetra, Mexican Bolsa, Swiss, London Stock Exchange, Borsa Italiana, Wiener Börse, Lima Bolsa, BATS Europe, Kazakhstan, Bulgaria, Warsaw, Santiago, Sao Paulo Bolsa, Buenos Aires, and the NEO. So if you want to get really good at reading financial statements, click on the video in the top right corner. Thanks for watching.